Hey you guys, so I'm getting ready to go over here and park right quick so we can talk about to rent or not to rent, to buy or not to buy. That is the question, right? So there's a debate going on online that's talking about whether or not now is a good time to rent, whether or not now is a good time to buy. What is the better time? Who am I? I'm Gerlinda Price. I'm the broker and owner of Fusion Properties LLC. From the capital to the coast, you're a realtor for life. Super excited. I'm blessed to own a firm and represent real estate here in the state, the best state. Let's argue about it. The best state in the entire country, North Carolina. I'm just saying, right? There's no argument because it's the best state. And also my brokers and I, we represent several counties here in North Carolina. So if whether you want to be in the Raleigh area, whether you want to be down on the coast, whether you want to be here with Fort Liberty, aka used to be Fort Bragg, we have got your back. We can help you out. So let's talk about whether or not now is a great time to buy. Should you keep renting? And I heard like the best, I want to say podcast around it, and it's what made me want to talk about it. So as someone who is currently working with several buyer clients, right? What I find kind of a 50-50 split of the buyer clients. And what I mean by that is 50% of the buyers are like, I just want a home. It's my first home, no big deal. It doesn't have to have all the bells and whistles. I want what I can afford, but I want to move. I want to stop renting, and I just want to find the home that God has for me. That's one half of the buyers. The other half of the buyers are like, it needs to have granite countertops, stainless steel, fenced yard. It needs to have 4 bedrooms, 3 bathrooms, like the whole enchilada, right? And there's nothing wrong with that, but sometimes the bargaining power and the position of purchase for a first-time home buyer is different from that of someone that's purchasing their final home, their move-up home, or what have you. Like Marvin and I, our first home, I think it was $112,000, and we could barely afford it, right? No. Our first home was a townhome. It was $89,000. It was a HUD townhome. We could barely afford it, right? It was 8% interest rates at the time. And I don't know, we were renting separately. So like I lived one place, he lived another place. Then we bought a property together. Then we got married. We did it backwards, right? So there's that. And that's just how life worked, right? But we bought that property as a HUD investment. The carpet in the place was completely filthy, right? Black is black. A lot of people would have looked at the carpet and said, well, I'm not buying it because the carpet's nasty. We got new carpet, right? But it was a 3-story townhome. We could afford it. It was an 8% interest rate. We got it on an ARM, on an ARM loan, right? So that meant that when we bought it, interest rate was 6%. Next year went up to 7%. The year after that, it went up to 8%. Hey, Clotilda, God bless you. We are talking about the age-old debate of whether or not now is a good time to, should you keep renting or should you purchase? So Marvin and I bought that property, and then we lived there. I want to say we lived there for maybe, a long time, maybe 8 years. I'm not sure, but somewhere between 6 and 8 years. And when we sold it, it had increased in value, and we had a profit of $32,000. So that $32,000 paid off our debt, and we had like $4,000 left over. We went on down the merry little way, and we moved on about our business, right? So when people are talking about now, I don't want to rent because houses are so expensive. I'm sorry, I don't want to purchase because houses are so expensive, or it's cheaper for me to purchase, cheaper for me to rent. Right? Houses are too expensive. It's cheaper for me to rent. I want you to think about it this way. And this was the quote that I heard. It was like, oh, I got to get on here and talk about this. So think about you're buying a home and the mortgage interest rate is 8%. That only sounds high because we're used to interest rates that were 3.5% and 4%. 5 and 6% only sounds high because we were used to interest rates that were 3 and 4%. But when I first came into real estate, interest rates were between 4% and 6%. Right? And so then there was the drop, and then there was the increase. It is always a great time to buy, but get this quote. Either whether you rent or purchase, if you're renting, right? Let's say you purchase and you say, okay, my mortgage payment is more than my rent. That's more than I want to pay. I don't need a mortgage. I can just rent. But you're still paying a mortgage. If you're a renter, you are paying a mortgage. You're paying someone else's mortgage, not your own. Think about that. Right? So when people say, I'm just going to keep renting because it makes more sense for me to rent because I don't want to pay the mortgage payment, you are paying the mortgage payment. You're making the mortgage payment of the seller, and that seller 9 times out of 10 is making a profit of somewhere between $300, $400 to $600 over what you're paying them. So not only are you making their principal and interest mortgage payment, you're probably covering their taxes and their insurance and their profit. And you're paying off their mortgage incrementally over the next 30 years. You are paying a mortgage. When that guy said it, I like to throw my phone, because even though it seems like that's basic common sense, we should understand that. And I'm not saying that people that rent lack common sense. I'm not saying that. I'm saying that it should be common sense for me as a realtor, that if someone's renting, they're making a mortgage payment. You are, and you already can afford to, right? But this is the other thing that he said. He said, when did people stop looking for affordable housing? Now, what does that mean? Because affordable housing can mean 2 different things. Affordable housing could mean like down payment assistance loans, or finding a property that fits an affordable housing criteria based on how the housing authority defines that, right? But what he was saying by affordable housing, no, starter homes. When did people stop looking for starter homes? What is a starter home? It could be 3 bedrooms, 2 bathrooms. 3 bedrooms, 1 bathroom, 3 bedrooms, 1.5 bathroom, and it could be a home that's under 1,700 square feet. He said, when did people stop looking for starter homes? So what I shared with you was mine and Marvin's first home was a townhome. It was a HUD foreclosure. It was all we could afford. And when I tell you that $850 was painful every single month, we know how we were going to make it sometimes, right? Because we weren't fresh out of college, but we were very young. We bought our first home, and the interest rate was so high, right? Plus we had a lot of consumer debt. So there was that. And then that was our first home. Then our next home was $112,000. It was a split level or a tri-level, and it was the colors I hated. My 2 least favorite colors together are gold and brown, yellow and brown, right? And so when we pulled up to the house, my mom was like, okay, we're going inside. I'm like, I ain't going in there. That house is yellow and brown. Mommy, I told you. My mom was my realtor. Mommy, I don't want a home that's yellow on the outside with brown shutters. How ignorant of me. I could have painted it, right? So we get inside, and the sellers are semi-rude. So I'm like, not the wife, but the husband. He was semi-rude. But as they start showing us around, Caleb was little at the time. Caleb loved the home. We loved the layout of it. I just didn't like the outside. It had this gorgeous creek out back. It had a huge yard. The yard was over 0.69 acres. It had a workshop off the garage. That was our starter home. It was $112,000, and that was a stretch, right? 17 years ago. 18 years now, right? So when we think about should I rent or should I buy, number one, if you're renting, you are paying someone's mortgage. Even if you're renting an apartment, even if you're renting a condo, even if you're renting a townhome, you're either paying the mortgage of the corporation or you're paying the mortgage of the individual, right? Either way. And then let's say that you say, okay, Garlinda, I want a larger home. Start with what you can afford. Start with what is the size you can achieve and have right now, and then grow from there. You can refinance later on down the road. So that brings me to my third point. Okay, the third point is, and this was a statistic that the investors were sharing, is that, okay, so I think it's Blackstone is a corporate buyer that's buying up all the properties. They're just sucking up all the properties they can possibly get in major areas, in metropolitan areas, and some areas like this, right, in the urban areas. And they're buying up a lot of the inventory, and it was driving and is driving up home pricing. So a lot of people say, well, I'll wait until prices go down. So the point that was made that was so excellent to me on this podcast, and what I want to share with you is, if you're saying right now, I'm going to sit out the market, I'm going to sit out as a buyer, and I'm going to wait it out because interest rates are so high. Hey, Michelle Coley, God bless you, love you. I'm going to sit out the market. I'm going to wait right now because the interest rates are so high. Think about this. Interest rates are high right now. They're 8%. You could always refinance. Interest rates are high right now, but housing prices are also high, right? There's limited inventory. And you're like, okay, Garlinda, what's the point? The point is, right now, demand is low. So that means that what I've been seeing in the market is there's some negotiations taking place. There's some closing costs being paid. There's some price reductions being made. Why? Because the sellers want to sell. There's not enough buyers to buy. So therefore, that presents an opportunity for the person that takes the plunge and says, you know what, 8% interest rates, I'm going to go ahead and purchase. I can always refinance. I'm going to bite the bullet if it costs me just a little bit more later on. Why? Because this is what's going to happen. What are the laws of supply and demand? When supply is high, demand is low. When demand is high, supply is low. So right now, there's a slow demand. So we're starting to see more properties come on the market. We're starting to see greater opportunity with concessions being paid by the seller in terms of price reductions and closing costs across the board. But and that's at an 8% interest rate. Why? Because you could go and get an ARM. You don't have to get a fixed rate mortgage. You could get an ARM, and when it starts to go up in year 1 and 2, you could refinance, because then at that point, interest rates may have gone down, right? I'm talking to people that are wondering, should I rent or should I purchase? So let's say you wait. Let's say you wait until the interest rates go back down to, let's say, 5%, 6%. Everyone is going to flood the market because they're going to be like, oh my God, interest rates have gone down. Now is the time to buy. What's going to happen to the home values, the home pricing, not the value? Home prices are going to shoot up because there's a huge demand, a lower supply. So now it drives up prices, and now you're a part of that frenzy. So think about the fact that you want to purchase right now outside of the frenzy. So then someone said, well, realtors are just saying that. Mortgage lenders are just saying that. Investors are just saying that so they can get a commission. No, we're the trusted advisor. We have a fiduciary responsibility to you to tell you the truth, right? It would be unethical for us to be out here telling you something that's not true. We're talking about the law of supply and demand. That's the economic law, right? So now is an excellent time to purchase, because you don't want to wait when interest rates drop. And now all of a sudden the prices that I'll say not you, we all think are high right now, are going to be even higher when there's a less of them, less demand, and interest rates are lower. Now you're going to be back into the multiple offer and multiple bidding situations that don't exist right now. Right? I'm sharing with you right now, as we were looking at homes yesterday with a client of mine, we're starting to see some of the foreclosure inventory come onto the market that's habitable. Right? We're starting to see sellers that are a little bit more agreeable and flexible on pricing. Why? Because they don't want to make 2 mortgage payments, right? We're starting to see flexibility on, hey, I don't want to do any repairs, but I'll pay some of your closing costs. I don't want to do any repairs, but I'll give you some credit. And I'm seeing an average number of about $5,000, right? So $5,000 the seller is that I've seen. I'm not saying all sellers, and I'm not saying everybody, just in case somebody misquotes me, right? I'm saying from what I've seen from the homes I've shown, I've seen $5,000 credit towards the buyer's closing costs, $5,000 towards their repairs. They can use it however they want, and there's some flexibility on pricing. So that's at an 8% interest rate, right? As rates continue to come down and we have fewer homes on the market, the price of the homes are going to be driven up. They're not going down. The other quote or statistic that the investor shared was that 80% of the loans in the U.S. of homeowners right now, 80% of the homeowners that they polled have a 5% or lower interest rate, right? And then 50% of those people have double equity in their homes. What does that mean? What is that saying? That means that a lot of sellers are like, I'm just going to stay put. All right. A lot of sellers are like, no, I have a great interest rate now. There's no reason for me to jump into the market. So therefore, as a buyer, you don't want to sit it out and wait for people to come onto the market and, hey, Ebony, and wait for people to bring their homes onto the market, because a lot of people are sitting still. Why? Because they have a great interest rate. Okay. So I want you to reach out to my team. And again, I'm the owner of Fusion Properties, LLC. We have so many brokers across the state that I will say that the areas that we work in. We're in Raleigh, Durham, all those counties around Raleigh, Durham, Zebulon, those aren't counties, those cities, right? Knightdale, Wendell, is it Youngsville or Youngstown? Wilson, Rocky Mount, Edgecombe County, all the way down to Brunswick County, New Hanover County, Onslow County, all the way over here, Cumberland, Hope, Harnett, Lee, Moore County, Robeson, Sampson, I was going to say Lee County again, but we work all those areas, right? So we have agents in each of those markets. Now is an excellent time for you to purchase a home. Don't wait. If you are a renter, you are paying a mortgage, right? So if you say, well, I want to wait, I don't want to pay that much in a mortgage, you're paying a mortgage. You're paying someone else's mortgage, and you're not getting the tax benefits from it, right? You're not getting to write off the interest. You're not getting to write off repairs. You're not getting to write off anything as it relates to the home that you could write off, no depreciation. So that means that could decrease your taxable income, increase the money that you get to keep throughout the year, and or get back by way of an overpayment of a tax, which is what a refund is, right? You have a chance to get the tax deductions as an owner that you don't get as a renter. Okay, so give us a call, 910-494-7798. I would love to connect you with one of our brokers that works in the area you're interested in moving into. And let's say your credit is not where it needs to be. Now is a great time to start working on your credit, right? Especially if you say, you know what, within 2024, I really want to purchase a home. Start working on your credit right now. The lenders that we work with, we have several lender partners. We have some favorites, right? But you get to choose. The lender partners that we work with, the majority of them have a credit repair or credit arm that can tell you what you need to do. They can give you an entire map and blueprint of what you need to do in order to be able to be ready and prepared to borrow money. And I'll share with you that when I came into real estate back in 2009 on the crash, the reason the market crashed was because anybody that had a pulse could get a loan. Well, now, when you go to purchase a home, you have to have a strong credit profile. You have to have reserves. You have to show that you could afford to make your taxes and insurance and mortgage payment in the event something were to happen to you financially. If you have a co-borrower, that co-borrower has to be as strong as you are. Okay, so it's not like they're just giving money away. They're not just giving loans away. But the blessing around that is that they're going to lend you the money, which means you're in a strong financial position, which means you're not going to do it. They're not going to allow you to do anything that would damage you, your credit, or the potential to lose the home. They're not going to put you at risk, right? So let us connect you with a really great lender partner. Let us get you on the road to home ownership. Get on the road to earning incredible tax benefits. I'm not an accountant. I'm just saying, as a homeowner, I have tax benefits that I think are pretty great. And then if you sell real estate, if you are a real estate agent, there's a tax code law that if you're an investor, you get to write off and have the benefit of an additional tax write-off that doesn't exist for someone who's not a licensed real estate agent. So if you're licensed and you've thought about, hey, I really want to buy a property, but maybe you're not actively licensed and you need help doing that, we'd love to help you with that. Now, you have to be working a minimum 17 hours as a licensed real estate agent to take advantage of that tax code, okay? So we just look forward to being your expert of choice. We look forward to being your realtor of choice, okay? 910-494-7798. Again, it's Garlinda Price. I'm the broker and owner of Fusion Properties, LLC. From the capital to the coast, your realtor for life. Love you guys. God bless you.